For more on the earnings season so far, pretty short so far, let's bring in Howard Silverblatt, Senior Index Analyst at Standard & Poor's. Howard, we know that the pre-market is showing some bullishness, a positive reaction to Alcoa. How do these numbers fit in with your expectations for this group, commodity-related players?
Well, whether it's commodities, materials, or broader to the IT, as we'll see tonight, the numbers are good. The headlines are going to be good. We're looking for 42% year-over-year sales ex financials, 12% increase. The headlines are going to be very good, but that's not the full picture here. We need to look quarter to quarter. Beating out Q2 of last year is no great feat. In fact, if we couldn't do it, we'd be in major difficulty. So we need to look at the progression quarter after quarter to see where we stand in this recovery.
So let's compare commodities to tech. You mentioned tech, and we'll have Intel after the bell. We know that materials, and you point this out all the time, don't have the same market muscle, the same weight as the technology group. If we need to see something more than just beating from the last quarter of or the same quarter last year, what is the market interested in hearing from an Intel tonight, for example?
The tech is definitely it, and the increase in tech, we're looking quarter over quarter, about 6%. Sales are picking up. They now account for the largest piece of the earnings within the S&P 500. So their production, their sales are very important. More important than their actual earnings, actually, at this point, is their future sales, to see if corporations are starting to spend, if CapEx will pick up. So far, it has not done very well this year, and whether or not consumers will continue to buy items that use chips.
Howard, you mentioned sales remain a wild card. How does that affect guidance? Everybody's waiting to hear about guidance, but if companies really don't have a very clear picture on sales, are they going to share a lot with these quarterly results?
They'll continue to be cautious, at least that's what we believe. They've been that way up to now. Companies cannot control the general economy. They can control their items. We saw that with Alcoa, you know, with cutting people down. They can control their product, what they make, their hiring. They cannot control the overall economic environment. They can only react to it. The sales are the key item here. You can only cut for so long without increasing your sales. So we need that spending, and that's going to be the key item to look where we stand quarter over quarter and where the sales go.
Howard, you're the dividend guy. You know all things dividend related. What kind of things are we going to hear from companies about whether they're boosting dividends, not ready to boost their dividends this quarter?
It's been a great half year, and if you look at last year when it was the worst half of the year, obviously it's much better in comparisons. But we think we're going to have a good positive year, 5.6% increase. A lot of nervousness, especially over that BP item. Over 3 months, they ended up killing their dividends. Staples is the one that's really stepping up to the bat now and increasing their dividends. The beginning of July is usually very slow, and then they pick up with earnings. But we think the end of the year will be the telling time. Companies need to see earnings for the second and third quarter into the fourth. And at that point, perhaps we'll see some of these financials. G's already said that they'll take a look at that point. You know, fourth quarter is going to be key for dividends.
All right, thanks, Howard.